Coinbase shown their seriousness. They mean business. We should certainly take notice of the warning that states tens of millions of dollars. The effect on Shiba Inu is very severe in such cases. The iceberg is far larger than this, however. Next is something much more monumental. You won't believe it, I promise. However, what am I really referring to? Allow me to clarify. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more Shib news, be sure to click the like button. There are some crazy developments in today's news. Example, Bitcoin trading titan Coinbase just revealed a surprise. Just recently, they came clean about their massive $25 million donation to Fairshake, a crypto-focused super PAC. Coinbase is preparing for an aggressive lobbying effort in the run-up to the US elections. As you can see, the cryptocurrency community is pretty excited about these elections, and everything isn't peaches and cream. A tempest is on the way, especially because prominent figures like Joe Biden have attacked cryptocurrency. The community is reeling from the impact of his latest veto, which has prompted calls for a crypto crackdown. However, Brian Armstrong, CEO of Coinbase, is not holding back. He's making it known that crypto voters must take action. Politicians will not take us seriously until they get the message that opposing cryptocurrency is a poor decision. It's time to put the doubters in their place and stand with the crypto candidates. In the eyes of the cryptocurrency community, this is about far more than petty politics. Our position in the digital world has to be protected. Did Coinbase really infuse $25 million? It's an indication that the action is going to heat up soon. Rest assured, everyone, you are in for quite the adventure during the next several months. However, this is not the main reason I am thrilled today. A tremendous finding kicks off today's proceedings. Funds traded on U.S. spot Bitcoin exchanges had net inflows of $105 million yesterday, the 15th day in a row. This run has been really noteworthy. Additionally, we have seen inflow streaks that were considerably longer in the past. Extra time. When individuals began to experience excessive euphoria, those inflows ceased and were replaced by outflows. If you recall, this change took place in April. Long streaks of inflows were supposed to be a thing of the past as inflows became negative. However, investors have poured money into Bitcoin ETFs over the last 15 days running. A combination of cautious confidence and eagerness permeates the air. There are those who are optimistic about the crypto space's future because of this tendency, but there are also plenty who are cautious because of how fast things may change. In general, there is a sense of optimism mixed with a hint of apprehension as everyone eagerly awaits the continuation of this winning run or the inevitable repetition of past mistakes. One little detail is about to lead this to have a major effect on Shiba Inu in the near future. We'll address it in due course. However, another significant finding was also announced today. For the first time since December, Bitcoin long-term holders have begun accumulation. Bitcoin ETF inflows are encouraging, to be sure, but skeptics would say that all we're seeing are new, more conventional investors getting into the cryptocurrency market. This viewpoint is reasonable to some. They see it as a sign of faith in the revolutionary potential of cryptocurrencies from more conventional investors who are just spreading their bets. Looking at it from this angle, it's less of a support of the crypto movement and more of a financial plan. But now that early Bitcoin adopters are coming back, the enthusiasm is palpable. It was in December that they started aggressively collecting again. People were getting ready for the approval of a Bitcoin ETF at the exact same moment, which is interesting. These seasoned players were frantically trying to stock up on Bitcoin while it was still relatively inexpensive, as this incident sent shockwaves across the globe. The potential for billions of dollars in inflows was obvious to them when they considered the idea of a Bitcoin ETF. This time, they were correct. The adoption of the Bitcoin ETF caused a massive influx of capital worth billions of dollars, which in turn drove up its price. Bitcoin reached fresh all-time highs of almost $70,000 in less than 2 months. It seems the wise old whales were correct. Their calculated wager was well rewarded, and now it seems that they've returned and are once again piling up. Some have speculated that this is due to the impending launch of trading for the Ethereum ETF, which was authorized not long ago. The 15 days of inflows into the Bitcoin ETF have prompted some to speculate that this is due to Bitcoin's recent reawakening. Every argument has merit. The approval of the Ethereum ETF may be drawing investors and attention, and the recent uptick in Bitcoin's price might indicate a market awakening. But one thing is quite obvious, and that is independent of the right viewpoint. Optimism reigns among the crypto whales. As they negotiate these exciting advancements in the crypto world, investors are closely watching their actions, which implies a trust in the market's future path. They have returned to accumulating. So, how does everything work in the background? We should examine on-chain data first, however. The most recent analysis from Bitfinex Alpha states that long-term Bitcoin holders have changed their strategy, which indicates a movement in the market. According to Bitfinex's analysis, these investors' selling pressure has subsided due to a notable uptick in purchasing activity, and this is crucial. Bitcoin exchange reserves have fallen precipitously since February, which has boosted prices recently and might pave the way for more price increases. You may be wondering why I'm bringing up Bitcoin now. Concerning Shiba Inu, what is its relevance? The Shiba Inu, as I've said before in my films, is very sensitive to the price of Bitcoin. People are looking for additional proof since doubt has been growing recently. Thus, we go. Shiba Inu prices tend to go up when the market as a whole does, particularly when Bitcoin prices go up. But when the market falls, Shiba Inu often fall much more sharply. All year long, this trend has persisted, particularly noticeable by the end of April. For example, Bitcoin hit its lowest price in 3 months on May 1st, when it fell 15% from its April 23 high of $66,000 to $56,000. Curiously, Shiba Inu followed suit, hitting rock bottom on May 1 after a precipitous decline on April 23. As a significant 23.5% decline at the same time period as Bitcoin saw comparable pressure to fall. The significant association between Shiba Inu and Bitcoin is shown by their coordinated price movement. The fact that Shiba Inu gets sick when Bitcoin does is a reflection of how interdependent these cryptocurrencies are in the market. There has been a 79% link between Shiba Inu and Bitcoin over the last 30 days, according to market data from Into the Block. The price swings of Shiba Inus have been highly correlated with Bitcoins, indicating a significant positive relationship between the two. Even while 79% doesn't seem like much, it's really rather big in the statistical world. The 79% association between the Shiba Inu and Bitcoin prices shows a substantial link. Basically, Shiba Inu are quite predictable. Almost 79% of the time, they will follow the price movement of Bitcoin. The strong relationship between the two cryptocurrencies' market behaviors is shown by their high degree of connection. Coming full circle to the present Bitcoin bull run, I think you'll find this to be quite intriguing. In case the 15 days of inflows haven't piqued your interest, what I'm going to disclose may be the clincher. The Bitcoin exchange-traded funds, ETFs, offered by BlackRock and Fidelity have been quite successful so far this year. According to Bloomberg ETF analyst Eric Balchunas, who cited intelligence data, these Bitcoin ETFs have accounted for 26% of BlackRock's total inflows and 56% of Fidelity's. Farsight investor data shows that since its introduction about 5 months ago, the iShares Bitcoin Trust, BlackRock, and the Wise Origin Bitcoin Fund, Fidelity, have received a total of $16.6 billion and $8.9 billion, respectively, in inflows. Having Bitcoin ETFs account for 26% and 56% of their total inflows, respectively, is ridiculous when you realize that BlackRock now sells 429 ETFs and Fidelity has 70 ETFs. With so many investment choices available, it's clear that big institutions are putting a lot of resources into Bitcoin. It seems like we might be on the brink of a possible bull run, not financial advice, given the newfound excitement from former Bitcoin investors who are jumping back into the market and the hype around the approaching US presidential election. However, how do you feel about that? Submit your thoughts in the space provided. Your comment would be much appreciated. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.